let's start with the very obvious place about what's really driving this situation at the moment. For you, and we could fill up the next 25 minutes with this question, what is driving the embedded finance boom across Europe at the moment?
I think the answer is on the very high level, as simple as demand and supply. And what I mean by that is, if we look on consumers to start with, I think especially European, but not only consumer, they really demand for a couple of things that they were not always linked towards and with financial services. So first is the need for convenience and not spending too much time on something that does not add too much value to any of us, like payment. The other driver behind the demand is need for individual treatment service. So not being treated as part of bulk, but being being recognized towards individual need and individual context. Third element is being able and demand for hence to spend more than we can in the particular moment, context, and situation of our cash flow. And fourth, that is translating much more towards the employee or gig worker situation, the demand and need to be paid more instantly when our work is done, or the day of our work is done, or the service we execute towards specific situation is provided. And I think this demand has been there for a very long time, but this is technology that made it really possible to happen and be supplied, which gave the rise of number of fintech companies tapping into those historically unmet elements of demand, creating pretty much fintech space.
As we were saying there about the demand there are so many examples of innovations all the time. You know, every day I get another example coming into my inbox from a different company who's come up with this new solution, this new idea. For you, what are the best examples of innovations and use cases we're seeing in embedded finance? And secondly, which are the ones that are really exciting you at the moment?
I think, where should I start? I think it's a great benefit and privilege to be part of a company like Marqeta that works in Europe, but also globally with most innovative and sometimes challenging companies being on the forefront of both embedded finance and fintech space in general. So I think I can pull very much from our company experience, providing a couple of examples here. One of them being our cooperation with Uber and Branch to power their Card Pro, which what it allows, it pretty much gives the driver an instant access to automated payouts each and every day, or sometimes even after each and every service is provided, but in the same time is allowing the driver to benefit from, for example, discounted or either rebated or providing cashback situations like fuel purchases or charging the car. So that's one of the examples. I think the other one very close to us in Europe is our partnership with Swiss4, where we power the element of the holistic solution. We power basically the instant personalized payment part of something that is fascinating, which is an app merging together financial services, but also in the end of the day, the lifestyle and high-end lifestyle of their customers.
Now, you said at the beginning about the demand. Let's extend that. Do you feel that customers are becoming more demanding? There is demand there. People are getting very used to using the technology, experienced at using the technology. Are they more discerning now? Are they more demanding of the options that are available to them?
I think the initial demand, later on supply, makes, again, the elements beyond the supply more and more something that becomes the new normal. So, especially in the brand context, it may become a disadvantage not to be able to provide the elements which again became something more natural and expected rather than historically a differentiator.
We've been talking a lot about sort of the positives and the growth and the demand. There has been a journey here. There has been an explosion in this. Looking backwards, what lessons do you feel have been learnt by people putting more embedded finance options in? Where have the pain points been, the problems? You don't have to name names, of course, but where do you feel those lessons have been learnt?
I think maybe not answering directly, but seeing also through basically the changes in the industry. I think historically there was a rise of fintechs, and fintechs were trying to go pretty much B2C and build the customer base on their own. And I think especially in all the, let's say, funding challenges we see on the market, there is a lot of future for fintechs to try and go instead towards the big brands today, and those brands having, let's face it, customer or buyer loyalty, buyer relationship, multiple and frequent touch points. So I think that the learning possibly is that in consumer space, the future of embedded finance is basically matching the capacity and capabilities of fintechs together with brands and making out of that the best experience for the buyer.
Talking about those big brands, there's obvious benefits that we've already touched on of having embedded finance options. Is there a risk potentially if you're not offering these options because people almost expect it? They're buying something which is a little more expensive than they might do normally. They suddenly don't get the opportunity to pay for it over 3 months or something, and they turn away because they're so used to it. Is there a risk of brands, if they don't embrace embedded finance, that they could get left behind potentially?
I think there is a risk always in every industry, and specifically also for the brands in this context, to be a follower, not the leader. Because in the end of the day, each and every brand in their context, they are competing with alternative brands, and the element they are trying to achieve is customer lifetime value. So embedded finance can address actually and support the brands in increasing the customer lifetime value, either by increasing the purchasing power, that being by allowing additional sources of funding. And those sources of funding also went through massive change, historically being credit card that was issued by traditional players, and or personal loan, today being changed to a very individual context of buy now, pay later. So this is one of the elements that brand providing the increased purchasing power, but that in individual context of individual purchase, vis-a-vis the brand that is not providing that, naturally is able to capture the market share at expense of the other players. The other being just the payment experience. So let's face it, I mean, payment starting from the e-commerce context is nothing that is exciting. And we as myself as a buyer, I simply hate to spend time in the context of something that does not add any value to me. It's costing me additional effort, costing me additional time, and I'm not there to do the payment. I'm there to find what I want, and I want to get it. I want to get it delivered. Everything in between, at maximum, is a neutral experience, if not negative. So also, brands bringing more and more as element of embedded finance, the instant payment, seamless payment, and towards the future, the player one type of experience when payment happens somewhere in the background, but I simply tap on that what I want and I get it. That's really the future, and brands who will embrace it faster, they will gain on consumer experience. They will increase most probably also the frequency of the buyer returning for the positive experience, that vis-a-vis alternatives.
Those customer experiences are something that fascinates me, because when you are the customer, you're looking from the outside in, it's just seamless, it just happens. As you say, it happens in the background. For you, how much work has to go in to that user journey, that user experience to make it seamless? Because that doesn't on quickly. That's not easy. How much work do you see in the future going into that to make that experience even better?
I would say majority, because in the end of the day, it's not about an experience, it's about the experience towards individual buyer. So it's a potentially very large effort, but also coming from utilization of players and services that allow individualization of the whole experience, the whole basically journey through starting, again in e-commerce, from having someone on the web page, that towards basically the good delivered. So that level of individualization will call for utilizing more and more AI tools and bringing information and data from outside or in other contexts, that being the financial services broadly speaking, but also behavioral information coming from, again, different contexts. So this is a big effort, but it doesn't need to be a big effort for an organization, for a brand. It means much more choosing potentially right partners to help building this individual experience rather than trying to build it by themselves. As this, again, this will be very specialized game that will call for unique capabilities. And let's face it, brands cannot afford building everything by themselves. So this is a big effort, but big effort rather thought of as a service, as a right set of the right partners to make it really happen in the context.
Well, you speak about partnerships and the importance of the right partnerships. Let's go on to that next, and we'll try and approach this as sort of independently as possible, I suppose. What advice would you have about setting up those partnerships? How do you make sure you've got the right partner in place? How do you develop that relationship? What's your advice on that?
As usual, I would say it's a power of three. So first element is, and I think from the brand perspective, is not thinking through an individual context, but thinking through potential number of contexts in the future, and thinking and choosing through the lines of someone who is able not only to support a specific use case, but also has way broader experience in ecosystem and can be also the partner that is able to support number of potential future use cases. Because it's very easy to fall into the situation where you need to rely and manage as a brand multiple partnerships across something that you keep developing. And basically what needs to be developed will keep evolving because this is the area which is very fast-paced environment. So that's element number one. I think the other element is scalability and proven scalability of the partner. Someone who can support you today, but with whom you can safely grow your program and scale 5x, 10x, 50x, hopefully. And something that may not come as a natural factor, but partner who is really a partner, and that proven by they discussing with you towards potential solution, they are asking tough questions, and who are able to also answer tough questions, that being not only what you want to do, but what is it you want to achieve, and why do you think it's the right solution. And I think that very dynamic, sometimes difficult discussion is the best source to basically identify, are we doing the right thing together? Such a partner in the context also bringing something that is not natural for the brands, which is understanding the current state, but also the future of, broadly speaking, the ecosystem. That is something that maximizes the probability of the right choice here.
But let's take this to the beginning of that relationship. What advice would you have for brands that are wanting to start implementing embedded finance solutions into their offering? How do you get that process right? Because I'm sure it's not as straightforward as everyone would like. What examples do you have of that going well? What are the lessons you can learn and things to avoid? What advice would you have in that space?
Right. I think before starting the process of looking the partner, really, really discussing internally, and that across number of functions up to the very high level of the company, what is it we are trying to achieve. And having this definition helps later on in each and every discussion or discussions around basically selection of the partner, why we are doing that, what we are planning to do. Because sometimes it's, an element of executing, for example, or trying to address the cost equation, which may be right, but I think especially embedded finance in the context has a power to address the top line, and having the right definition, understanding why we are doing things and for whatever reasons, can also tweak your mind later on from choosing someone who is the cheapest towards someone who can deliver most of the value. So I'm not sure if that specifically answers the question, but that's what I would share from my experience.
No, that absolutely does. Where I want to take things next, though, is responsibility, because as you were saying earlier on, it is expanding people's buying power. And there's often the question of, well, should people be buying this if they maybe couldn't afford it otherwise? How do we make sure that any of these embedded solutions are responsible, both from a business point of view, making sure that the customer can actually afford it and they're protected, and from the customer point of view, that they can actually sensibly afford to make this decision? How do we get that balance right? What sort of checks and balances do you think there should be? What are your thoughts on that?
No, I think that's very much important. What you say is very, very right. While basically brands are interested for the buyers to spend more, and the players in the industry would like basically to participate in that, ending in the situation where someone is unable to repay is potentially very, very significant. And I think this is also where the role of the regulators is very fundamentally important. And as much as, sometimes many companies in the sector, they're struggling with regulatory requirements, I think that's a stabilizing factor, making sure that all the players or the participants in the industry, we are maintaining this perspective as well.
And you speak of regulation. That was where I was going to go next before I went to the room with any questions. How critical is it that regulations are aligned with what the industry is needing? How do you see that balance? Because it is still a relatively new technology. It's emerging. There's developments all the time. How do you see that relationship developing? Because as you say, the regulation is key.
Well, I think I'm always starting from the assumption that regulators try to address the perceived upcoming risks or materialized risks. And especially in Europe, that the angle is protecting the individual, where there is imbalance of power and access to the information in between companies or basically financial services providers and the individual. So I think basically this will continue to evolve based on this paradigm, obviously. I think some areas that are even less fintech related but payments related possibly are upcoming. So as fraud or disputes started to be something that was very relevant to card payers, this area basically, and also regulatory pressures, allowed or enforced processes existing on the issuer side to address those elements. Now, there is for a longer period of time, especially in some markets, rise of the bank payments. So Swish in Sweden, BizClik in Poland, or Ideal in Netherlands. And as much as many buyers, many consumers prefer that for a reason, elements like chargebacks, disputes, fraud in this area is not necessarily highly regulated today. And as this is not very much regulated, also the banks or the issuers of money, so basically the organizations where the bank accounts are, they did not implement mechanisms protecting the buyer. But as this is becoming more and more relevant, also payment methods in Europe, especially in some countries, this will give rise again to regulators, coming back to participants on the market, to the banks, and basically enforcing certain changes in this area.
I do want to get on to the future, the next phases of the embedded finance revolution, but I'm also conscious we've had a lot of questions through different sessions today, so I want to give a bit more time to that. Do we have any immediate questions from the room on this one? I set myself up to fail there, didn't I? I absolutely did. I'll carry on then looking to the future, and just a reminder to our virtual audience, you can put your questions in through the app. Just say who you are and where you are getting in touch from, or all our questions are from Mr. or Miss Anonymous. So let's look to the future, the next phase. What do you see happening next? It's been such a fast-moving revolution, really. Where do you see things happening in the next, say, 5 years?
Right. I used to read and still read a lot of cyberpunk and science fiction, so I have my, let's say, a bit more visionary glasses on me at the moment. But I think really in consumer element of the equation, I'm not sure if this is the context of 5 or 10 years, but what we see in the movie Player One, in the buying context, I think this is sooner or later to come. So removing the payment from the experience, powering the individual purchase worthiness with more and more with AI solutions, that's really the future for consumers. So addressing more and more the convenience, addressing more and more the individual or hyper individualization of the experience, both in terms of payment experience, but also financing experience. I think this is what is coming very soon. It's much more the question when than if. I think on the seller side, so this is really fascinating, that the first space to be addressed by fintechs or being brought the elements of embedded finance was consumer, while there is such a big space of the seller provider, that being primarily occupied by SMBs, very small companies, that is still largely untapped. And I think this is the area where we'll see more and more embedded finance, broadly speaking, coming, because let's face it, take European e-commerce. More than 60% of that is through marketplaces, aggregator platforms. So we're speaking even today, it's like on the sell side for those, it's like $1 trillion a year. And most of that is paid out to basically either sellers or providers. And those are small companies, gig workers who are not credit worthy today. From majority of the classical banks' perspective, they never were cracked how to help them and finance them. And this is also the space where I think that is also the next way for fintech and embedded finance. If you're a seller on our marketplace, we know as marketplace how much revenue you are making. We have that information on your most probably financial worthiness. That's one. And I think starting from that, I think marketplaces are very much equipped to start and think, and in the end they offer white label wallet that will not only be towards basically making the payouts to whoever provided good or service on the platform or marketplace, but also will be a starting point of, well, providing working capital solution, supporting expense management for a small company that can't afford getting the professional service around that, and more and more. So I think consumer is a different game. It's much more towards convenience, automation, hyper-individualization, and towards the SMBs participating in the e-commerce economy, getting banked.
As you said early on, it is becoming the new normal. Anyway, that's, I think, a good place for us to wrap things up. Marcin Glogowski, SVP, Managing Director for Europe and UK, CEO at Marqeta. Thanks ever so much for your time.
Thank you, Neil. Thank you, everyone.